All right. Good morning, everyone. Thank you so much for joining. Today is May 22nd, and this meeting is for our LJ Realty team. And let's get started with our interest rates. The interest rates, according to Freddie Mac, they're still hovering around 7.02 versus on daily basis on Mortgage News Daily, they were showing up at 7.05. So still above 7%. Unless your client goes with FHA loan, with FHA, we can give them, or the average for FHA is around 6.62. Okay. So we have seen it for month after month that you were hovering. We can say so far this year, we have been hovering around 7%, right? So when we're talking to your clients and everything like that, when they're asking here where the interest rates are going, they are right now still on the higher end. Your client, or should they buy right now? Should they wait? It really depends on their situation. Can they afford the monthly payment or not? But if they can, this is a good time to buy because there's less people out there. There's less buyers. There's less competition, right? That's the conversation you should be having with your clients. It's just simply less competition. Let's make a solid offer. Okay. Why the interest rates are not coming down, right? As realtors, we should know that the Fed is following the inflation data. Okay. And as of April, the data showed that the inflation was at 3.4. It came down from March from 3.5 to 3.4, but the Fed wants to see this at 2%. So as long as it's going down, we should see our first rate cut for 2024 and next meeting or the meeting after that. Okay. So even if your clients are buying in today's market, right, rest assured that their home prices will go up. You guys can see the stats here for Queens that over 5 years, the price, if you were to buy a house at $815,000 today in Queens, in 5 years, is going to be worth more than 950. So right now it's showing 964,000 in 5 year term, right? So you guys can see that if they were to buy today or simply were to wait, what will happen if they're simply going to wait? The price is going to be higher, even the interest rate might be lower. So if that's the case, the mortgage payment is still going to be high because now they're paying a higher price after a year later, 2 years, instead of buying today. So if you have leads in your KV core and you're talking to your clients, have that conversation. Hey, it seems like it's a bad time to buy because you're seeing all these headlines or you're seeing these surveys saying that 70% of the people saying this is a bad time to buy. But is it really? Do you think it's really good time to buy when one property has a line out the door at open houses and you have to go and overbid? You know, you're still gonna go through those negative things if you were to wait. Okay. Right now, one of the biggest things that the clients have is the mortgage payment. Because of that 7%, they can't afford it, right? I'm talking about the clients who can afford it and they're simply waiting for the interest rates to come down. Okay. Please have those conversations. Even show these slides. You can show that, hey, in 5 year term, you can see that the historic appreciation in Queens was 6.64%. If you don't want to go with 5 year, go with 10 years. 10 years, you're looking at 5.34. So these are realistic numbers. These are data stats got by from MBS Highway. So you guys can definitely share that with your clients. Okay. How many people are still renting in Queens? Just in Queens, right? We are living in New York City. We have other boroughs and everything, but just in Queens, we have over 2 million people living here. About half of them are homeowners. The other halves are renting out their properties, right? So just know how much potential do you actually have in Queens. It's a lot. It really depends on which market that you want to actually target. Which area? Is it South Ocean Park? Is it Richmond Hill? Which area do you really want to target and look for those renters that's going to be ready to buy in the future? You just got to, you can't be, you're talking to someone today, just educating them, it goes a long way. Telling them to save up for their, down payment and closing cost, telling them to improve their credit scores. All those are positive things as a realtor. You want to bring those things, when you're having a conversation with the renter, hey, you might not be ready today, but I want you to prepare yourself. I want you to buy a house. Or do you plan to pay your landlord a rent every month for the rest of your life? Or do you really want to build some equity and buy a house, even if it's going to be in a year or two? So plant those seeds for the long term, guys. Right? Just in Queens, there's a huge potential. Please go ahead and tap into that. Okay. So now some of you guys do go through this where your clients are going to one loan officer and then they go to another one and somebody said, hey, you qualify for 500 or 600,000. I want to show you guys what is the difference, right? So if the annual income is $115,000, down payment is 85,000, monthly debt $400. Welcome everybody. Okay, so interest rates around 7.05 that we saw here. Property taxes 7,500. Property insurance 1,500. So this is one scenario for one household that we actually did a file for. Okay, so this person were to purchase a house at comfortably making these payments, and they say, hey, I want to stay below $4,000 monthly payment, then they should go with 43% debt to income ratio. But when it comes to the price, home price, they need to find a property that's going to be around $530,000 versus if they were to increase that to 49% DTI, and that will take the monthly payment to $4,300, but now they can qualify for up to $615,000. Huge difference from 520 to 615, right? Just going from, but are they comfortable? Even on the other hand, we see clients that go with FHA loan and they're allowed to go up to 54%. So the same client can take a property with FHA for up to $686,000. So you guys can see there's about $150,000 different just by not increasing their income or decreasing. Nothing changes with their down payment or their monthly debt, just their debt to income ratio changes. So just note that maybe you're seeing a pre-approval, ask them, hey, what is the DTI they're using? Are they really maxing out on 54%? Or are they really going with 43%? And if they're really making it comfortable from themselves, even though they can purchase a house that's going to be close to 686,000, they're going with around 530. Okay. So this is how you want to guide your clients. Just know that when you're looking at the pre-approvals, those amounts can change. Okay. When we're talking about pre-approvals, look at the date when that pre-approval was issued. Some of these guys are showing you pre-approvals when the interest rates were around 5% or 6%. That value is not there anymore. So at 7%, they would be on the lower end. Okay. Also, how old your pre-approval should be. If it's anything older than 3 months, you should ask your client, hey, go back to the loan officer and get an updated pre-approval letter. Okay. Because the listing agent, when you do present an offer and now the listing agent is reviewing your offer, hey, you're putting an offer for 615,000, great. Let me call the loan officer and see what the status is for this application or this client here. So why don't you do the same thing before the listing agent does? Okay. A lot of people forget about the closing cost. Hey, I have $85,000 and this is my down payment. How about, do you have additional $27,000? And that's for what? People are going to ask for that, right? It's like, what is this closing cost? So we want to tell you that, hey, what is going to be in your closing cost? One of the biggest things that we're going to show you a little bit later is going to be your recording, mortgage tax recording fees for the county, right? That's nearly 2% there. So just know that you need to have down payment and your closing costs. So for this client, they had to bring $112,000 at the closing table. Okay. And there's so many home buyers out there or homeowners out there that are just having a difficult decision to make. Should I sell my house or should I just rent it out? And even these surveys, these articles that you guys see online, there's some truth to this because like you guys can see that roughly 6 out of 10, fixed rate mortgages are below 4%. So how could we justify that? Hey, sell your house that's below 4% and go buy another one at 7%. So just know that no client is going to do that unless they really have to. Find out the reason. Are they going through a hardship, right? Or do they need to upgrade their house? Is their family growing? Whatever the situation is, find that out. What is the real reason? And because you're an expert, you're a real estate agent, right? You should know these facts that, hey, I understand that you are at below 4% interest rate on your current mortgage, but let's find out the reason that you want to move out, right? Nearly your average 30-year mortgages around in May is 7%, as we mentioned. But there are some times, how about if you have bad tenants, right? How many times we heard that? Hey, I have someone at the second floor and they stop paying rent 3 months now. Who's going to pay the mortgage? Right? So there are some pros and cons to this. You got to have that conversation with your homeowners and see where they stand. Maybe they have a tenant, they have no issues for many years, they have an interest rate of 2.95. You should not advise them to sell the house. Maybe they'll give you a referral, but the best thing for that client is just to stay there. On the other hand, if they are going through some issues, you're the professional, you're going to help them find a new property or help them sell this property at a premium where they'll be very happy with. Okay? So if your client is debating, should I sell my house or should I not, find out the facts and then advise them. Some headlines in the news here: homes are overvalued in most of the United States. Right? There were some states that showed New York was not one of them, but I still feel like, when we're putting in offers, guys, let's think for the client. We're going through with one of our agent. She's messaging saying that, hey, the property is listed at 790,000, and sorry, 770,000. That's the listing price, 770. But after the offer was presented, the offer got accepted. The listing agent says, hey, we're selling as is, and we're selling it with open permits and with violations, right? I highly recommend that if you're a first time home buyer, if you hear those things, you got to withdraw your offer or lower your offer where you can have, where your client can be happy with it. You don't want them to, put in an offer that's above asking. They put a little bit above asking, thinking that there's no issues with the property, and there are issues with the property, and the seller is telling them before going under contract, right? So now, as of this morning, they lowered the offer, and now they're trying to see if they can work something out with them. So if you see any problem, if there's open violations, open permits, tell your client, hey, it's best to move away. If they really like the property in this situation, like they did, now bring the price down much as possible. It's hard to say how long will it take to close out that permit. It will be hard, how much it will, take to actually do this. And if you want to do new renovations, you might really have to close out the other permits. So it can be a really complicated situation for your clients. So the best thing to do if you're a first-time home buyer, hey, it's best that we stay away. Let me find you a new property or another property. If they're really consistent with it, they want to move forward, lower the price. Okay, no listing agent should be saying, hey, your offer is accepted and now we have open violations. And when we say as is, guys, that as is should be just reflecting your property's condition. Hey, we're selling as is, we're not going to fix anything. I know there's cracks on the building, I know there's the kitchen needs to be upgraded, we're selling it as is. The roof needs to be updated, we're selling as is. We have no issues with those. But we do have issues with open permits, violations, anything that's going to give your clients a hard time to close out after the closing. You don't want your client to, trying to renovate something and they have to go to Department of Building and trying to get that fixed. Okay? We have seen one client has been waiting over 2 years in Nassau County. Okay, so we want to learn from that and we want to tell our clients, hey, it's best thing to do is move on with another property. Okay, and now this is a big news, guys. This affects every one of us, every realtor out there. So the lawsuit that has been going on, right now, DOJ, which is your Department of Justice, they have replied back recently, yesterday, saying that they don't want to see any, basically, where offers to compensation, how much you're going to get paid from the seller side anywhere, not just on MLS. So not even on our, agreements that we have, right? They might get updated in the coming months from MLS, meaning that they don't want, a DOJ simply saying that we want to make sure that the buyer's agents are not getting paid, or want to make sure that the seller is not forced to pay the buyer's agent. Okay, so those are big news. It's just not on MLS, but I believe they're going to upgrade all the paperwork in the coming months. Okay. And now this is another big news. I learned this about this just yesterday. So this one is 7-day agreement from Zillow. 7 days. So we're gonna get into the details of this, but remember a couple of meetings back we mentioned this, that hey, this is what we're gonna be competing with. If there's new laws, there's gonna be other brokerages out there, a lot of other big companies that's selling leads like Zillow or Realtor.com. They want your clients. They're gonna steal your clients, right? So one way they're doing this is gonna be having a agreement signed from Zillow. Once they have those, then they might assign it to whoever is advertising with them and provide that agreement with them, right? But as crazy as it sounds, it's going to be 7 day agreement from Zillow. So what is this about? So another headlines here: Zillow launches buyer's agreement for home tours. So this is non-exclusive. Okay, so we want to talk about non-exclusive, meaning they can work with you and they can work with another agent. So this is a non-exclusive 7 day contract for buyers to use for home tours. So if the government or basically coming up with new laws saying that hey, you need an agreement, Zillow said hey, here's a 7 day agreement. You want to tour this Saturday, you want to go to this open house on Sunday, no problem. Let's sign this agreement. It's going to be lasting for only 7 days. Okay. After that, they will go ahead, if they're comfortable with that client, then they might go from 7 days, then go with the exclusive contract, maybe for 30 days, 60 days, 90 days, whatever they agree on. Okay. But Zillow is taking that step where they're saying that, hey, we want our buyers or potential buyers to sign an agreement with us. So this is gonna be, they said why 7 days? Because that's the average time frame for a buyer to request a tour, right? So basically, if Zillow is going on, you're going on Wednesday today on Zillow and you want to see a property, they're giving you 7 days to sign a contract and see that property. Okay. So they're saying that this is going to be more of a dating type thing. Hey, you don't want to marry that agent. You don't want to be with that agent for three months or a year, without knowing what they really have to offer. But within those 7 days, you can really figure out, hey, are they really aggressive or not? So what do you guys think of this? 7 days agreements from Zillow. You think this is a good thing, positive thing? How will it affect you guys? Anyone?
I think it's not a good thing for us.
It's
Like
not.
the companies are gonna put so much money in advertisements, below advertisements, and take over all the clients.
Yeah, yeah. And we wouldn't be surprised if Redfin or Realtor.com or any of the other websites, they come up with 5 days or they come up with 10 days, right? But we have to keep it realistic now that, hey, nobody's going to sign any agreement unless they're really comfortable with you, unless they're you really bringing value to that client, right? And, when we're competing with Zillow and Zillow is saying, hey, 7 days, who wouldn't want to do this? Right? If I'm the buyer, we have to put ourselves in the buyer's shoes. It's like, okay, fine, I'll go with the 7 days, and see what, see how how is this agent performing? Is that agent even professional when they're coming in and showing me the first property? Right? Anyone else? Any comments on this?
I feel that it's also a bad thing because what if like within those days and you can't find a property fast enough and they just go automatically go to another agent, which leave you out the loop.
Yeah, so these are non-exclusive. Simply they can work with another agent, right? When we are talking about that. But on the other hand, yes, this is just for touring. So they're saying that, hey, this is not to say that, hey, Julian, let me work with you for 6 months. This is for like, Julian, show me this 123 Main Street this weekend, that type of thing. So they're gonna judge you just based on that
Oh,
one listing. So if you're comfortable with that, as they mentioned, it's like this is coming as a dating form. Hey, let's just date this person, meaning just show it one time, twice, and everything like that. If you can show maybe 3 properties on that weekend, great. Hey, this person was really aggressive. Maybe they'll try another 7 days on the following weekend, and let's say Sheldon shows them 10 properties, and then Mr. Early shows them 15 properties. Whatever the case might be, every week they might be testing on another agent before they saying, hey, fine, I'll go with you, Julian. Let me sign this agreement with you for 3 months. I'm not gonna give you more than 3 months, but that'll be exclusive. I'll just work with you. So, these things are coming in June, July, August. I want to make sure that our agents are prepared before anyone else, and we can actually tell them what value you're bringing to them, to your clients. Okay, so here were some feedbacks. So some people said, hey, Zillow just wants you to work your butt off for nothing. And on the other hand, someone said, hey, a 7 days non-exclusive, non-compensation agreement is genius, right? So some people are saying that, hey, it's a good thing. Some people are saying it's a bad thing. Only time will tell, but just know that the buyers was gonna go what is best for them. So when you're writing up your agreement, when you're approaching to your clients, just know that they have options. It's sad to say, but they do have options, and we just want to make sure that you have your game on top notch, that you can help them out. Okay. So when the buyer and the agent decides to work together throughout the home buying process, they will take an important step to sign a longer term, usually exclusive agreement, which will outline the payment terms and the services that the agent will provide. So, two different forms. They're gonna start with the 7 day, non-exclusive. You don't have to pay me anything. Let me just show you, and then from there, the once they're happy with them, then they can have it signed a longer term, usually exclusive agreement. When we say exclusive versus non-exclusive agreements, it simply means that exclusive is this is only for you. Just like as a listing agent, if I have an exclusive listing, that means I only have it. Nobody else can have it within that time frame. If it's non-exclusive, it's an open listing. That means I can work with multiple agents. Okay, so you have to think for yourself, like, hey, how will I compete with other agents and other brokerages out there? Okay, big news for you guys. Things are changing, and we want to make sure that we are on top of this. Okay. Any questions so far, guys, on this? So some of you guys join a little bit later, but just know that the Zillow is coming up with a new plan, 7 days agreement, that's gonna be competing with us. And it already started. I believe they started in some markets, but you're gonna see that before August, it's gonna be everywhere. Okay.
So,
Yes.
with the what you said earlier about with the buyer's commission, how exactly will we be getting paid? Like, being the buyer's agent.
From the buyer side, right? So you would tell the buyers two things. Hey, I will work with you for X amount of time. That X amount of time can be, as low as we saw 7 days or 30 days or 90 days. And the second thing is how much you're going to get paid. And it does not have to be just a flat rate or flat fee or percentages. You can say, hey, if I were to get paid from the seller side, then you pay me this much. Everything is negotiable. So two things. One is how much you're gonna get paid and how long is your agreement is for. Okay.
Okay.
Yeah. So obviously, in August, when it's like fully implemented and everything, but in the next coming weeks and months and everything, I really want you to start typing up your own agreements, right? Hey, what I really want to do, just one page thing, and let's review that together. I really want you guys to stick out from rest of the agents who are not going to be prepared, and really see what we have to offer. Okay. All right, guys. Next topic was
Okay.
yes, Mr. Ali.
Uh, Zillow will be giving out these leads. Obvious, there'll be like a referral, right? Which means they're gonna charge. They're gonna charge whoever they give these leads to,
Yeah, the people.
unless
Yeah, the people who are already advertising on Zillow. So there's people who are
like
already
agent. You're referring to premier agents.
correct. So they're gonna give those leads to them with that agreement for 7 days.
Hmm.
Yes, and I'm pretty sure, like I said, competition, like with Redfin and Realtor, I'm expecting them to come up with their programs. But I don't have any guidelines on those, and let's see how Zillow is gonna be competing with them, and where does our agents fit in, in the middle, right?
Okay.
Sure. Any other questions, comments on this, guys? This affects every one of us. All right. Even if you guys can think of something later, it's perfectly fine. We can, chat about it. Next was that this was a interesting article. It says, I bought my house this year in 2024, and 7 things I wish I have done before getting serious about my search. So if these people are writing different articles about this, why not, as real estate agent, bring value to your clients? Maybe your clients might be concerned about 1 or 2 things out of these 7 things. So number one is getting their credit scores, knowing their credit scores, right? Because there's so many people out there. They feel like, hey, I saw an advertisement that I can have as low as 500 credit scores and still buy a property, or 520, 550, 580. Yes, you may be able to get it, but are you going to get the best terms? Right? So some people don't even focus on their credit scores when they're in the middle of processing or of looking for properties. So for you as a real estate agent should be, hey, I'm showing you these properties. I'm not a loan officer, but I just want to make sure that, hey, how are you doing with your credit scores? Hey, it doesn't matter. My credit scores are, around 500, but I saw, these articles that, I can get a loan, or I know that, there's some loans available for those. Yes, but if you have time, why not improve them? Your credit scores will count. So when you're, going for application, what type of interest rates you will get, your interest rates will matter based on your credit scores. Is one of those factors, right? So improve your credit score as much as possible. Some of these guys, when we ask for their W-2s as loan officers, their pay stubs, their tax return, they're all over the place. So telling them, hey, we're showing you the properties now. I just want to make sure you have all your documents ready. I know you got your pre-approval 2 months ago, but when you do your application, your loan officer is going to ask you for your tax returns, pay stubs, W-2s. Have everything in one packet, in one folder, right? So this way, whenever, or have it in your email, so you can just forward that whenever it's necessary. Okay, so have them prepare those. Like, hey, you're buying a house, you're gonna get a mortgage for $400,000, $500,000. So the bank needs to verify all this information. So have that as a list for your clients. Hey, have these things ready. If you provide our folder, the LJ Realty folder, when you open it up, it has all those lists in there. So provide some value to your client on that note. Okay, and start looking for free money. Right? When we say free money, what is this? This is your assistant programs. There are some grants available. We have some agents that actually do the research and help out their clients. But just be very realistic with them that if you're going to go with grants or any of the city or state level program, there's a waiting period, right? And it does not mean that you can close within 30 days or so. Some of these guys can take several months. So this way is going to make your law firm look weaker, because you know that, hey, you won't be able to close on time, and the listing agent and the sellers are saying we need to close within 30 days. So if you're going to go with this, it's perfectly fine. Do your research, but just know that it's going to take several months to get that approved. Okay. Next was that asking for loved ones for financial help, right? Some people don't have that option, but some people do. You can say, hey, some loan programs do allow gift funds. So maybe you do want to ask for your family member to give you a gift for $3,000, $5,000, whatever they can help out with. Okay, just asking for help goes a long way. And have a better understanding for the down payments, right? There are some down payment programs where they allow you to put down 3%. So many people out there do not know that for conventional, you can put down less than 20%. Some people say, hey, if it's conventional, I need 20%. It's not the case, guys. You can really put it down 5%, as low as 3% for home ready or home possible loans. Okay, just understanding that there's different options for your down payment. And how many people are forgetting accounting for your closing cost, as we mentioned. So we don't see 2%. It's always, between 3 to 5%. So just know that you do need that additional to your down payment. So many even agents think that, hey, down payment includes your closing cost. It does not. So what is the biggest difference between down payment and your closing cost? Your down payment goes towards your purchase price. So let's say you're putting down $50,000 and your property is worth $500,000. That means you put that $50,000 towards your house, and now you're getting a mortgage for $450,000. But your closing costs, these are your expenses to get the mortgage. One of the biggest closing cost factor is going to be the mortgage amount. How much mortgage are you getting? Okay, so your closing cost includes your title report, includes your appraisal fees, includes your origination fees, includes your home insurance. Anything that has to do with expenses for that property at the closing table is going to be your closing cost. Okay. And there's so many people, maybe you guys saw some memes on internet too. When you buy a house, you have no money for furniture. you have no money to do any upgrades, right? Because you guys went, or a client went all in just to max out on their DTI, and they put in all their down payment and closing cost into that property. But you got to make sure that you guys have reserves, or your client have reserves for emergency, or for fixing up things, or upgrading your property. Okay. So these are things that you want to talk to your clients about. So this is your mortgage. When we say closing tax, right? I mean your closing cost. One of the biggest factor is your mortgage recording tax. So this is what the government, this is what the county is charging. So this is called houseit.com. You guys can go there. I will be adding this link on our portal as well, so you guys can just go through from there. But just know that if it's a loan is for $500,000, the buyer is going to pay $9,600 for that mortgage recording tax. I truly feel like it's way too much. It should not be. Look what the lender is paying. Lender is paying 0.25%, which is $1,200. So if we say the closing cost is going to be 4%, almost nearly 2% is going towards your mortgage tax, right? So if you had no mortgage, if you were buying all cash, your client will not need to worry about this. Then your client will be saving $10,000 because they're not getting a mortgage, and there's no mortgage recording tax on this. Okay? So when you're talking to your clients, hey, what is the biggest, why you're saying there's going to be 3 to 4% my closing cost? Almost 2% is going towards your mortgage recording tax. Another 2% might goes towards your title and your home insurance and your other escrows and all that. Okay? But this is your biggest factor. And if it's a 2-family house, right? So many properties that you guys, sell every month, they're either single family or 2-family. In Queens, we do see a lot of 2-family because we have rental income coming in. But if the loan amount is $800,000, guys, how much do your clients going to pay? $15,000. $15,000 in closing cost just by on your mortgage recording tax. So this is the biggest factor. Not a lot of agents talk about this. And I do want you to start telling your clients, hey, you have your down payment and now you have your closing cost. Within that closing cost, the biggest factor is your mortgage recording tax. And that is nearly 2% in our 5 boroughs here. Okay? These are the little things that you can tell your clients so they can be ready for it. You don't want them to be surprised, especially when the loan officer is going to be reviewing them, the file with them, and they say, "Hey, your recording fees is going to be 15,000 because Rupinder, you already or Mr. Abbas, you already spoke to them about beforehand." They're going to say, "Okay, great. I already know this because Mr. Abbas already told me this." Right? Just give them an idea of all these fees that's going to be included on that. All right. So some people don't have closing costs, right? Saved up. So for them, we have a new program. This is by our lender UWM, United Wholesale Mortgage. I made a video yesterday on this too, on TikTok and everywhere. So I want to go over that with you guys. So this is the assistant loan program by UWM, which allows your client to get up to $15,000 or 3%. So up to $15,000 as an assistant. Okay, so number one, it is not free money. It's not a grant. A grant is something you don't have to pay back. A loan is something you guys do know that we do have to pay that back. But on this $15,000, there's no interest on this, and it's going to be sitting as a second lien on the property. Okay, what is your first lien? That's going to be your main mortgage that you're getting. So let's say, same example. You're putting down $50,000. You're getting a mortgage for $450,000. So the bank said there's a lien against your property, $450,000. So when you do sell that property, you need to pay that back. Now you have a second lien for $15,000 because you're not paying that upfront. They're going to be adding that towards your loan. So this is a down payment assistance program, which qualifies your clients. Simply put, up to $15,000. Okay, so if your client is putting down 20% down payment, 15% down payment, 10% down payment, 5% down payment, they will not allow this. This is only for people who's going to be putting down around 3% or 4% down payment on their loan. Okay, so how does it actually work? Your first lien mortgage must meet your loan to value requirements, as we mentioned, 43%, 49%, whatever the value is there. Okay. UWM will provide a second lien and they will give you, your client, $15,000 at the closing table. So it will be part of your CD. Okay. The second lien has no monthly payments and it has no interest. So once the first mortgage is paid off, then the second lien will be, needs to be paid. But not everybody will wait 30 years for that, right? Or 20 years or whatever the term is. Some people will refinance after 6 months, right? If the interest rate comes down from 7% to 5% in the next year or two, guess what? Everybody's going to be refinancing. So UWM wants that money back at that time. Or if you were to pay off your mortgage or sell your property, you still have to pay that back. But it's a great helping hand for people who are in need. So your client might say, hey, I only have down payment, I don't have closing cost. So you can say, hey, that money that you have, we'll use as a closing cost, but for your down payment, we can use up to $15,000 from UWM. You don't have to ask for your, family member for a gift or anything because UWM is becoming your family member there, right? So you can make your second lien that $15,000 payments beforehand, but it's not required. Since there's no interest on this, there's no reason to pay that up front. That should be left behind as a second lien. Okay, so how can your clients qualify? As we mentioned, not everybody qualifies for this. There's going to be people who are in need, right? These are the people who are looking for assistance program anyways. So first of all, the income. The income needs to be below 80% area median income. So what is the area median income for 80% in Queens here? Around $95,000 now. It was 90,000. It went to 95,000 recently. So now we can qualify even a little bit more borrowers out there. So just know that if your client household income is less than $95,000, if they're a first-time home buyer, they have their credit scores of 620 or more, we can qualify them. Okay. So here's some key points here. They must be a first-time home buyer. They must make below 80% area median income, which is 95,000. Their credit scores needs to be 620 or more. They are required to take a homeowner's education class. One of our clients did it the other day, and I believe she did it within a few hours or so, and she emailed us, and we were pretty surprised how fast she did it. Right? It really, as long as your client is benefiting from these programs, they have no problem doing this education. Okay? So again, up to 3% of $15,000 as a loan added as a down payment assistance program. There'll be a second lien on the property, and you do have to pay back if you refinance or sell the property. Right? Closing costs is still additional. As we mentioned, why is this great? Some people don't know that they have closing costs to worry about. When they're surprised with that, now maybe they can use that money for their closing costs and use down payment assistance program from UWM. Okay? Any questions, concerns on this, guys? This is a really good program. It should be able to help out your clients. Okay? So as real estate agents, when you're talking to your clients, you can tell them, hey, maybe you don't have funds for repairs or emergency funds. As we mentioned, you don't want to buy a house and you have nothing left in the bank. So maybe you do need that $15,000, right? So even if you have $15,000 sitting in your bank and you need that for home repairs, save that. Maybe you do need to upgrade that roof and it's going to cost you $7,000 to $8,000. Maybe you do want to upgrade a bathroom and it's going to cost you a couple of $1,000s there. Right, so hold that money in your account. Let's use this assistant program, and so you can get that $15,000 up front, and you don't have to worry about it until later. Okay, some people don't have that luxury of asking a family or friend for a gift. Okay, so we want to be that guide for our clients that hey, we have an assistant program if you need it. Okay. So as for real estate agents, you're just offering another option. How many times your clients ask you for this? That, hey, do you have anybody you guys can guide me for this, that's going to help me out with any closing cost or down payment assistance program? Yes, we do. Right? Hopefully you can guide them to our company here, LJ Mortgage. We're the brokers here for UWM, so we can offer that program. Okay, or any of these loan officers here. Okay, all our loan officers are really working really hard to build relationship with other real estate companies out there, other agents from other companies, and I really want them to have a good relationship with every one of our agents here too, right? Bringing value to you guys. So please feel free to contact any of our loan officers. You don't have to just try to talk to me or Jas, but we're all family here. So talk to any of one of them, and they can help you out. Yeah, Rupinder.
Like you just posted another day about the 0% down payment program.
This
Can
is
you
it.
tell us about that?
That is the same
So
one.
this is,
The same
oh,
one.
okay.
So the reason I don't
The
put the 0% down payment, because people feel like, hey, I need to have nothing in my bank account. I can go and get a mortgage. That's not possible because we have down payment and we have closing cost. So that 0% down payment program is that $15,000 credit that we're talking about.
Thank you.
Yeah, you're welcome. All right. All right, guys. Next is your earnest deposit. Some of you guys are saying okay to listing agent when they're saying, hey, we need 10% or 8%, 7%, 5% off the purchase price, as earnest deposit. I know every one of us do know what earnest deposit is, right? Some of you guys are not using the term when we're actually, when you're going under contract. Use it. Tell them, hey, earnest deposit is your money that's going to come back to you at the closing table, whatever money you're putting down. But that amount that you're putting down can jeopardize, right? It can be in jeopardy if you were to back out, right? You simply can't say that, hey, I'm not be able to move forward because I don't like the property anymore. But there's ways of protecting your client with this, making sure that the contract has bank appraisal contingency, your home inspection contingency, and a bank commitment contingency. That the bank already gave you a pre-approval, but now is going to give you a commitment letter. If they do not provide you with a commitment letter, meaning you cannot get a mortgage and you went to another loan officer and they did the same thing, that means you simply don't qualify, then you have the right to get that money back. Okay, you want to protect your client and mention there's plenty of other things that you need to know in the contract, but the biggest one is your home inspection, your bank appraisal, and your bank commitment contingencies. Okay, mention those every time you're talking about your earnest deposit, and make sure that your those things are in the contract to protect your client. Okay. You want to help out your homeowners with the spring cleaning, just telling them little things, they do matter. If they need to, repair the property, they should repair it. I have someone that's, wanted to put a property on a higher end, even though the property is beat up. That's going to be a hard sell, right? Do not sugarcoat it. You're a professional. You guys have the knowledge. There's so much knowledge that you guys got over the years and everything. You can confidently say that, hey, if the property is worth $900,000, please let's not put it for 1.1. Right? It's gonna be really hard sell, and it's basically you're gonna be wasting your time and your client's time. But if they do little upgrades, painting the property, cleaning up the backyard, all these things will help them, bring in the value. But it has to be realistic. When you're making an offer, just make sure that you're putting in an offer that's flexible, right? It's a serious offer. You don't want to lowball either. You don't want to, unless there's known issues. When I know there's open permits and open violation, I want my client, if they really like the property, okay, fine, you want to go with this, let's lowball them and feel them out. If they still want the listing price and you have open permits, I'm not going to go with that offer. Well, I don't want my client to go through that. Okay. So the following are new property that's coming on the market. This is by Arshdeep, AP here, listing on 14953 127th Street, guys. Is a 2-family, so 6 beds, 3 baths, listing for 1.1. Another one is by Saab, Sarbjeet here, is in Huntington Station, listing for 925, 4 bedrooms, 3 baths. They're all on MLS. And the last one is by Daljit. This one was also overpriced. It was listed at around 950. Now it came down to what it should be at 849. So again, instead of wasting anybody's time, you guys already have the tools, RPR, geodata. You have all the tools out there that any expert would need, and you show that to the your homeowner, and they should be telling you to price it properly. There's so many, you guys have seen it too. Why there's a line out the door when there's an open house for a property that's maybe worth 800 but is listed for 750? Because this is a strategy. You want people to come in, you want to put in the lower end so you can have some eyeballs, more eyeballs for that property. Okay. And how do you know if it's a fair price or is a fair offer? You're doing the research and you're putting in a contingency. Bank appraisal contingency needs to go on the contract to protect your client. And you want to have that open conversation with your client. Hey, I feel like we're going over $20,000, Mr. Buyer, but let's protect that. Let's put in a bank appraisal contingency. If the bank says no, it's worth $20,000 less, then we have room to renegotiate or simply cancel the agreement. Okay. All right, guys. We got 10 minutes left, guys. This is the format that I use. I hope that some of you guys can copy this, that every time I want to work on a real estate transaction, I have my KV Core open. I'm looking at my dashboard. I'm looking at my smart CRM. I'm starting from the top. I'm going with every client that I have. First, I'm just checking if the alerts are set up. Second, I'm texting them any new property that came on the market. Okay. And third, I'm going to be spending maybe 10 to 15 minutes on my listings, just like, typing in different zip codes, different areas, and just seeing if there's new properties. Has nothing to do with any clients. I'm just trying to increase my knowledge for the community that I want to serve. Right? So if I want to be in Elmont or Valley Stream or Hicksville or Brooklyn, whatever the area might be, you want to type that in there and look for those listings. Start spending at least 10 to 15 minutes just on KV Core, and trust me, that 10 to 15 minute will turn into an hour once you get used to this. Okay. You want to open up your transaction desk, see if there's any signatures due, right? Maybe you send an offer letter that your client signed those agreements or that offer sheet or not. I'm looking at MLS just to see what is the commission that's being offered. Another deal that we had yesterday, another agent of ours is trying to negotiate. So whatever, it does not matter if it says 0%, it doesn't matter if it says 1%, whatever it is listed as your comp, you can always negotiate it. Hey, Mr. Listing Agent, I have an offer. What are you offering me? Right? Is it 0% that you put on there, or can you do something for me? Right? Negotiate. Everything should be negotiable. And then you have your emails. Like we said, 80 to 90% of the emails that you get is usually junk. But how would you know if you have any solid emails? By checking them, clearing up your inbox on a daily basis. Some of you guys do have full-time, part-time jobs and can't do it. How about on a weekly basis, right? Try to clean up your emails and Microsoft Teams, guys. The way the businesses are growing and everything, I don't have the time to pick up my regular 516 number anymore. So if you want to reach out to me, please just reach out to me on Microsoft Teams, right? So, and you want to go through any channels that we have in there for your deal and see if there's any update on that. Okay, these type of 5 tabs should be open on a daily basis just to see what is going on the real estate side. Okay. This whole thing, commission thing, will be gone, guys. So get used to this and start negotiating. Your presentation is going to be more important than ever before. If you don't have a presentation, I don't know how will anyone work with you. I have no idea. Right? We just can't say out of top of our head, hey, this is your home inspection, this is your bank appraisal, this is going to be, these are people who are involved in real estate. You want to give them a presentation. You want to give them on a PDF or anything that's printed, or even an email saying that, hey, this is what I have to present. If you want to create one, customize it, come to the office, let's start doing that, guys. Right, we have 70 agents. I want at least 40 agents to have their presentations ready before this new thing that actually launches. Okay. And we said the biggest thing when we're competing with other agents, know that what percentage or what amount you're going to charge, and have a clear communication. Hey, if I were to get paid from the seller side, then I will charge you this much, versus if I'm not getting paid from anyone, I'm going to charge you this much. Right? That could be one strategy. And what is the agreed time? Okay, nobody's gonna sign your agreement if you tell them, hey, sign an agreement for 1 year. Would you do it? Just ask yourself. I highly doubt it, right? Your standard exclusive right to represent is in your transaction desk. If you need any help on that, please let me know. It's pretty straightforward. Okay. And some of you guys doing advertisement, I want to give big ups to Rupinder. You asked for, I believe, for me to check on your Canva. We did, I believe, one or two change, and I saw that you posted something after that. As long as you know the format, we're good. That's all we want to know. And when we're saying putting in our company name, putting in our phone number, everything can be small, right? I see AP doing this now, a great job on him, doing those two. Couple of other agents, I believe Sheldon, you're doing. You sent me a flyer as well. So all those are good, right? So we want to make sure that everybody's in compliance. We just don't want to get any notice from any company or from any agency that, hey, we're not in compliance, right? We want to tell you, even on ljagent.com, all the way on the bottom now, it says social media artwork. So you guys can grab our logo if you want it. If you don't want to put our logo, just put an LJ Realty team. It's perfectly fine, right? But the company address, the company phone number has to be there. Okay? If you're putting in your phone number large, that's perfectly fine. Okay? So on your ljagent.com, guys, the password will be changing next month. Okay, we will be doing a reset on our websites, so there will be a new password in coming weeks or coming month, and I'll let you know of that on ljagent.com. Okay, and remember, guys, I want to end it with this: about 168 hours in a week. Not about, it's exact 168 hours in a week. How many hours are you really spending? Right? That's all you got to ask yourself. If you're spending one, let's increase that to five. If you're spending five, let's increase that to 10. I want to give really big ups to Sheetal. Sheetal, you have really, like I said, month over month, you're spending so much time, on real estate activities where you are seeing the results. And we feel proud as a company that, our agents are really getting into it. And especially people who have part-time jobs that they don't like, they want to get rid of those. That what we want the transition. If you're happy with your full-time job, you're making good income, no problem. But people who want to actually be on the other side, we want to be your guide. But you make us really proud when you're doing activities like you are. So keep it up. Okay, guys, our job is simple, that we want to go under contract. If you have zero under contract, right, you have no files under contract, it should bother you, right? It always bothered me when I was doing this, that, hey, we want to make sure that I'm under contract, even if it's one contract, because that contract is not going to go until closing for maybe next 30 days or so, right? Maybe 60 days, really depending on the buyers or the seller situation. My job is to have as many deals under contract. How is going to work? By showings. But if you showed one property last week, that's too little. You need to increase that much as possible. Okay, so work on your KV Core deals, all your leads in your KV Core, or whatever system that you want to use. Some of you guys are using Collab on MLS, is perfectly fine. I don't care. What are you guys using? Are you connecting with your clients, and are you ultimately showing and going under contract or not? Okay. We have two teams. Team Purple led by Sheldon and Team Gold led by Rupinder. Please reach out if you need any help, especially people who are watching this recorded later on. Please reach out to them if you need any assistance. That will do it from my end, guys. Any questions, concerns, anything on your mind? All right, guys. So big two takeaways should be Zillow 7 days, right? 7 days agreements. How are we going to compete with them, right? So that's going to be the biggest thing. And second is the down payment program that we have, up to $15,000. So if your client needs any help, hey, we have a down payment assistance program. We can help your clients. So on that note, thank you so much for joining. I will see you guys next week. You guys take care, right?
Hey, thanks, Lucky.
You're welcome, guys.
Take care.
Yep. You're welcome.
Thank you, Mr. Lucky.
You're welcome, guys. Take care.
Thank you.
You're welcome, guys. Take care.